Hello and welcome. Today, we are going to be tackling a subject that can cause a whole lot of confusion for so many people, non-coded income. And to make sure we get this absolutely right, we've partnered with the brilliant experts over at My Tax Accountant to put together a clear, simple guide for you. So let's get into it.
So let me ask you a question. Have you ever been flicking through your post, opened up a letter from HMRC, or maybe looked at your online tax summary and seen those three little words, non-coded income? And did you feel that immediate knot form in your stomach? That sense of confusion thinking, what on earth is this? And more importantly, do I owe more tax?
Well, you know what? If that sounds familiar, you are definitely not alone. It's an incredibly common point of confusion, but the good news is it really doesn't have to be that complicated. We're here to break it all down and make it simple.
So here's a quick look at our roadmap for today. We're going to start by solving the mystery of what non-coded income actually is. Then we'll dive into what it includes, what HMRC thinks about it, and the risks involved, which you'll want to hear. After that, we'll give you a step-by-step action plan, highlight some key dates for your diary, and finish up by showing you where to get expert help. Right, let's get straight into it. Section 1, the mystery of non-coded income. So what exactly is this thing, and why does it even matter? Okay, so here's the absolute simplest way to think about it. Non-coded income is just any money you earn that hasn't had tax taken off it automatically. If you have a regular job, your employer uses the pay-as-you-earn system, that's PAYE, to sort out your tax and national insurance before the money even hits your bank account. Well, non-coded income is pretty much everything else. And this is a really, really important point because it clears up a huge misconception. Non-coded income isn't hidden income. A lot of the time, HMRC is fully aware that you've earned it. It's just that they haven't been able to collect the tax on it through your tax code. And what that means is that the responsibility to declare it, well, it falls squarely on your shoulders. So that naturally leads us to our next question, Section 2. What exactly are we talking about here? Let's have a look at some of the most common sources of non-coded income, some of which you might not even be aware of. The list is actually quite broad. The big ones, of course, are earnings from any kind of freelance or gig economy work. Then you've got rental income if you're a landlord, interest from your savings once it goes above your tax-free allowance, and dividend income from any shares you might own. But it can even include other little bits of casual or irregular cash you've earned on the side. Let's make this a bit more real. Let's meet Chloe. She's a freelance graphic designer living and working in London. Last year, she earned a solid £25,000 from her various clients. Now, because she's self-employed, none of that money had any tax deducted at source, so her entire £25,000 is non-coded income, and it's up to her to tell HMRC all about it.
And here's a fantastic little pro tip for you. For the 2025/26 tax year, you actually have £1,000 tax-free allowance for both trading, like freelancing, and property income. So if your total gross income from these things is under £1,000, you don't even have to report it. But, and this is the crucial part, the moment you earn £1,001, you have to declare the whole lot. And that's not all. We can't forget about savings and dividends. For your savings in 2025/26, you've got your personal savings allowance. That's £1,000 tax-free if you're a basic rate taxpayer, and it drops to £500 for higher rate taxpayers. For dividends, there's a separate £500 tax-free allowance for everyone. Any interest or dividends you earn above those amounts, well, that's non-coded income, and it needs to go on your tax return.
Okay, now for the really serious part, Section 3, HMRC's view and the risks. This is where we talk about why you absolutely 100% cannot afford to ignore this stuff.
Let's start with the most immediate thing that will happen. If you need to file a self-assessment tax return and you miss that deadline, even by a single day, you will get hit with an automatic on-the-spot penalty of £100. No questions asked. And get this applies even if it turns out you don't actually owe any tax. Late is late. And oh, it does not stop there. This is where it gets really, really painful. As you can see, these penalties escalate frighteningly fast. After 3 months, they start adding on daily penalties of £10, which can rack up to £900. At the 6-month mark, there's another penalty of £300 or 5% of the tax you owe, whichever is higher. And as you can see, it just keeps getting worse from there. It's a very slippery slope. So you've got those penalties, right? Well, on top of all of that, HMRC also charges you interest on any tax that you haven't paid. And for the 2025/26 year, that interest rate is a pretty hefty 7.75%. To put that into perspective, for an unpaid tax bill of, say, £2,000, that's another £155 a year just in interest. And remember, that's added on top of everything else we've just talked about.
Now, stay with me because this next point might actually surprise you. I've just been talking about the fines for filing late and the interest on unpaid tax, but there's more. Late payments actually trigger their own separate set of penalties. It's like a triple threat: late filing penalties, interest, and late payment penalties. So if you were a whole year late paying that same £2,000 tax bill, the total penalties alone could reach an eye-watering £1,600, and that's before you even think about the interest. The costs can spiral out of control incredibly quickly. Right, that's enough of the scary stuff. Let's take a breath and move from the problem to the solution. This is Section 4, your step-by-step action plan. This is how you get it sorted and avoid all that stress.
The experts at My Tax Accountant always recommend this simple 4-step plan. First things first, check if you even need to file a return in the first place. Remember that £1,000 allowance. If you do, step 2 is to get yourself registered for self-assessment with HMRC. Step 3, and honestly this is absolutely crucial, is to keep really good, meticulous records of all your income and any allowable expenses. And finally, step 4, the big one. File that return and pay your bill before the deadline hits. Simple as that.
Here is another golden pro tip for you. This is probably the best piece of advice you'll get. The second that non-coded income lands in your bank account, transfer about 20 to 30% of it straight into a separate savings account. Just park it there. Forget about it. Don't touch it. This one simple habit means that when your tax bill finally arrives, the money is already sitting there waiting for it. It completely removes that horrible shock and the last-minute scramble to find the cash.
Now, this next section is all about dates you simply cannot afford to miss. This is Section 5, key dates for your diary. These are the critical deadlines that you need to get circled in red on your calendar. Okay, get your calendars ready. The very first date to be aware of is October 5th, 2025. That's your deadline to register for self-assessment if you haven't done it before. The big one, the main deadline, is January 31st, 2026. That's the day you need to file your online return and pay the tax you owe for the 2024-25 tax year. Finally, if your tax bill is over £1,000, you'll probably have to make something called a payment on account, which is basically an advance payment towards your next tax bill. That's due by July 31st, 2026. And that brings us neatly to our final section, Section 6, Getting Expert Help. Because, and this is the really good news, you absolutely do not have to figure all of this out on your own. Now, before we go any further, it's really important for us to make this clear. The information we've shared today is for general guidance only. It's not a substitute for professional advice tailored to you. You shouldn't rely on it exclusively to make your financial decisions. For that, you must always consult an expert. So if you're feeling even a little bit overwhelmed by all this, or if you just want that incredible peace of mind that comes from knowing it's been done correctly, the message is simple: get some expert help. The team at My Tax Accountant are ready to help you get it right the first time. You can reach them on 020-8570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. We really hope this guide has been useful, and of course, don't forget to subscribe to the channel for more helpful guides just like this one. Thanks for watching.